What do you think about what we heard today and what Chair Powell had to say?
Well, again, great to have you here. And in terms of what you just said, I think that's the story. And they're basically, the Fed is saying these tariffs, you want to go down this road, that's fine. What you're going to see is higher inflation. I think they raised it to 3%. You're going to see lower growth down to 1.4%. And I think it's all in the back of the tariff concerns, which are probably somewhat warranted. And I think the market sort of reacted in kind. We'll see what happens on Friday when the market reopens. But I do think you're right to bring up the bond market. I still think that's the story, and I still think rates are going higher.
That has been the signal, really, Dan, right? I mean, the bond market has been obviously touchier over the years.
Except they didn't move today. I mean, when you think about it, right? No, I mean, over the last few days, we've seen up or down 5 basis points in the 10-year, so it's not kind of signaling anything, particularly worried one way or another. I think that a lot of folks might not have expected to see that kind of takedown in growth, right? And the expectations of prices kind of higher. I thought Fed Chair Powell seemed like he had it all under control. I don't think by any means the questions out of the pool I thought were really aggressive. It's like, as much as investors want to see them get a bit more dovish, it seems like the press also wanted to see that happen. And he kind of just hung in there. I mean, I think it's hard to kind of look at what's going on other than oil, take the geopolitics out of the way and say that inflation has not gone in the direction that they want it to go. And it's going to be there pretty soon. So to me, I think the expectations for only two 25 basis point cuts this year, I think that's the thing that's really frustrating people. I think that they'd like to see what we had last year in the last few months. 100 basis points.
Michael, do the expectations feel appropriate to you with everything that's going on in the world? It's kind of hard to take out geopolitics, is it not?
I mean, it's very hard to take out geopolitics, and obviously the tariffs fit within that as well.
Sure.
I think what we've seen is that the Fed is obviously very backward-looking, despite the fact that Powell said that they're forward-looking and need to look forward. But he also, out of the same breath, said we need to see how the data comes out over the next couple months, which ergo means he's incredibly backward-looking. And so, listen, I think we can agree that inflation is likely not fully here from the tariffs, and that you're likely to see higher inflation pressures as you get towards August and September. Now, what that ultimately materializes as, no one knows. It could be 4%. It could be 4.5%. And I think if I was in the audience, that's what I would have asked. I would have said, what happens if inflation goes north of 4 while unemployment is going up? Then what do you do? What do you do in a stagflationary environment? And I think we could really be living in that come later this fall.
And what can they do, Tim?
I don't know. That's interesting because, I mean, that's kind of a bold claim right now, even though it wasn't a bold claim 6 months ago. I think it's fair, by the way, and welcome, Courtney. But I tell you what, I think today Powell, first of all, played it safe. Sounds like the Fed's taking the summer off. The one thing that was a little surprising to me is their tolerance for inflation at a 3.1% PCE. I mean, the sense I get is that they're strangely a little bit more comfortable with higher inflation or tolerant of it, or accepting of the reality. And then there was a point towards the end of the day, which I think also put some pressure, at least in his presser, I should say. I mean, when he started hitting comments that were hitting the tape, one of them was labor market isn't crying out for a rate cut. And going to learn more about tariffs over the summer. Those two things tell me we're not doing anything anytime soon. So we're still at 2 cuts expected for this year. It's likely it could be 1, but this is a Fed that is going to do 0. So if the market was expecting that, I don't think so. I thought it was interesting that semis closed higher on the day. Semiconductors were up 40 basis points. The rest of the market closed down small. Not a big deal, but the VIX collapsed. 6-7% lower on the VIX in the middle of war and whatnot. I think the market wants to go higher.
That's really interesting, Guy. I was just kind of thinking about energy and how it plays into all of this when we have so much up in the air with what's going on in the Middle East. But it is, at least when consumers see that price of gas, and if that fluctuates much higher, that's going to scare them. That also then could play into growth. I mean, how do you separate all this out, or how do you put energy into the mix here with this consideration?
We talked about it last night. It's a fair question. What we've learned, and I've learned it the hard way over the years, is geopolitical rallies in oil are typically pretty short-lived, and I think you're probably seeing it now. The other side of that equation, if something were to happen, and we said it last night, for example, Straits of Hormuz closes or something to that effect, that obviously has ramifications, and that's when you could see oil go from $70 now north of $90. And then that's a whole different, I think, equation. But short of that, I don't think oil is a story that people like us typically, or me, for example, want to make it out to be. I think the energy stocks are cheap, but I think the commodity is probably where it should be.